Corporate Administration. Chapter 3, Company Administration. Introduction. Company administration is a collection of resources including company filing, company records, company meetings, and the responsibilities of company secretaries. The owners or the shareholders of the company elect from amongst themselves some persons good in management as their representative to manage day-to-day affairs of the company. The person or representative elected by the shareholders to manage or direct day-to-day affairs of the company are individually known as director, and the collectively called the board of directors or the board. Key managerial personnel for company administration. 1. Managing Director. A managing director is a director of a company given special powers by its articles of association. He is the head of the executive structure of an undertaking by virtue of his membership of the board of directors. 2. Whole-time director. A whole-time director is a director who is in the whole-time employment of the company, devotes his whole time of working hours to the company. 3. The company secretary. Company secretary is a person who is member of the Institute of the Company Secretaries of India or any other individual possessing the prescribed qualifications, appointed to perform the duties imposed on him by the Companies Act, the ministerial or administrative duties and managerial functions delegated by the board. 4. Chief Financial Officer. The Chief Financial Officer, CFO, or Chief Financial and Operating Officer, CFOO, is a corporate officer primarily responsible for managing the financial risks of the corporation. He is also responsible for financial planning and record keeping as well as financial reporting to higher management. 5. Resident Director. A resident director is a specially trained full-time employee generally responsible for the management and daily operations of the organization. 6. Independent Director. An independent director is a director of a board of directors who does not have a material or pecuniary relationship with the company or related persons except sitting fee. Corporate Administration. Director. Director is a person who is in charge of an activity, department, or organization. In other words, director is a person who leads, manages, or supervises an organization, program, or project. Definition. Under Section 2(13) of the Companies Act, defines a director as any person occupying the position of director, by whatever name called. Appointment of directors. The directors of the company may be appointed in the following ways. 1. By the promoters of the company. At the time of company formation, the promoters generally name the first directors of the company. The promoters select prominent person to act as the first directors and mention on their names in the articles of company. 2. By the subscribers to the memorandum. The articles of the company confer a right on the subscribers to the memorandum to appoint the directors of the company. The subscribers to the memorandum shall be deemed to be the first directors of the company until the directors are appointed at the next general meeting. 3. By the shareholders in a general meeting. The first directors are appointed by the promoters or by the subscribers to the memorandum. The subsequent directors are elected by the shareholders at the general meeting. 4. By the board of directors. The board of directors may appoint directors in the following ways. As additional director, the board of directors may appoint additional directors within the maximum strength fixed for the board by the articles. In a casual vacancy, The directors are appointed by the shareholders in some casual vacancies such as death, resignation, disqualification or failure of an elected director to accept the office or due to any other reason. As an alternate director, the board of directors can appoint the alternative director. This alternative director has to act for the original director during his absence for a period of more than 3 months. The alternate director can continue as director only for the period of which original was eligible. 5. By the central government. The central government may appoint the board of directors when the company law board decides that it is necessary to safeguard the interest of the company. 6. By third parties. The articles give right to financial corporations, debenture holders and banking companies which have lent money to the company to nominate directors on the board of the company. Professor Shashikumar D.S. Corporate Administration. Auditor. Auditor is an official whose job is to carefully check the accuracy of business records. In other words, an auditor is a person authorized to review and verify the accuracy of financial records and ensure that companies comply with tax laws. Appointment of auditor. Appointment of first auditor. As per Section 139(6), the first auditor of the company shall be appointed by the Board of Directors within 30 days of incorporation. In case of board's failure, an extraordinary general meeting shall be called within 90 days to appoint the first auditor. The first auditors may remain in office until the conclusion of the first annual general meeting. AGM. Procedure for appointing first auditor. 1. At least 14 days' notice should be given to the members before the scheduled date of the meeting. 2. Intimate the proposed auditors regarding the intention of appointing as auditor. 3. Obtain consent and certificate from auditor. 4. Call board meeting. 5. Approve the appointment of auditor at the first board meeting. 6. Intimate the auditor and file a copy with Registrar of Companies, ROC, within 15 days. Appointment of auditor at first annual general meeting. As per Section 139(1), every company shall appoint at its 1-inch annual general meeting an individual or a firm as an auditor of the company who shall hold office from the conclusion of that meeting till the conclusion of its 6th annual general meeting or 5 consecutive years. Procedure. 1. Intimate the proposed auditors regarding the intention of appointing as auditor and ask for the following information and documents: Black Circle qualification, experience and matters of professional conduct. Black Circle consent to become auditor. Black Circle certificate. Call board meeting for the purpose of following. 2. Black Circle considering the information and documents received. Black Circle considering that qualification and experience commensurate with the size and operation of the company. Black Circle recommending the name of the auditor to the members. Black Circle calling annual general meeting, AGM. 3. Conduct AGM and get the ordinary resolution appointing the auditor passed at the meeting. 4. Intimate the auditor and file with Registrar of Companies, ROC, within 15 days. Corporate Administration. Appointment of retiring auditor. After completion of 5 consecutive years, the auditor may be reappointed by complying with the provisions of Section 139(9). A retiring auditor may be reappointed at an annual general meeting if 1. He is not disqualified for reappointment. 2. He has not given the company a notice in writing of his unwillingness to be reappointed. 3. The company obtain a written certificate from the auditor that the reappointment. 4. The company should intimate the auditor about his appointment within 7 days of the passing of the resolution appointing him. 5. The auditor should inform the Registrar of Companies in Form No. 23B within 1 month of the receipt of the intimation from the company. Appointment of Branch Auditor. 1. The accounts of the branch of a company are required to be audited by the company's auditor appointed U.S. 224 or by a person qualified for appointment as auditor U.S. 226. 2. The accounts of the branch are audited by a person other than the company's auditor. The company's auditor shall have the right to visit the branch and have access to the book and accounts and vouchers of the company. 3. The branch auditor shall have same powers and duties as that of company's auditor. Appointment of auditors for listed companies. 1. The Council of ICAI has accepted the recommendation of Securities and Exchange Board, India, SEBI, that audit of listed companies shall be carried out by the auditor. 2. The above decision is effective for accounting periods commencing on or after April 1, 2009. 3. All the auditors of listed companies are requested to undergo peer review process and get peer review certificate issued from the peer review board. Powers of auditor. Every auditor of a company shall have right to access at all time to book of accounts and vouchers of the company. There is an inclusive list of matter for which auditors shall seek information and explanation. The list includes issues related to a. Proper securities for loan and advances. b. Transaction by book entries. c. Sale of assets and securities in loss. d. Loans and advances made shown as deposits. e. Personal expenses charged to revenue account. Of Corporate Administration. 2. Auditor to sign audit reports. The auditor of the company shall sign the auditor's report or certify any other document of the company and financial statements or matters which have an adverse effect on the functioning of the company and shall be open to inspection by any member of the company. 3. Auditor in general meeting. Under Section 146, the company must send all notices and communication to the auditor relating to any general meeting, and the auditor shall attend the meeting either through himself or through his representative. Such auditor must be given reasonable opportunity to speak at the meeting on any part of the business. 4. Right to remuneration. The remuneration of the auditor of a company shall be fixed in general meeting. It must include the expenses extended to him but does not include any remuneration paid to him for any services rendered by him at the request of the company. 5. Consent of auditor. As per Section 26, the company must mention in their prospectus the name, address and consent of the auditors of the company. Duties and responsibilities of auditor. 1. Make report. The auditor shall make a report to the members of the company on accounts examined by him on every financial statement and shall state, a. Whether he has sought and obtained all the necessary information and explanation. b. Whether proper books of accounts have been kept. c. Whether company's balance sheet and profit and loss account are in agreement with books of accounts and returns. 2. Audit report of government company. The auditor of the government company will be appointed by the Auditor General of India, and such auditor shall act according to the directions given by them. He must submit a report including the action taken and impact on accounts and financial statements of the company. The Auditor General of India shall within 60 days of receipt of the report have right to a. Conduct a supplementary audit, b. Comment upon or supplement such audit report, 3. Liable to pay damages. The members of company have right to claim damages or compensation from auditor for any improper or misleading statement made in audit report or for fraudulent or unlawful conduct. 4. Branch audit. The accounts of the branch office of a company shall be audited either by the auditor appointed for the company or by any other person qualified for appointment as an auditor of the company. The branch auditor shall prepare a report on the accounts of the branch. Professor Shashikumar D.S. Corporate Administration. 5. Auditing standards. Every auditor shall comply with the auditing standards notified by the central government in consultation with National Financial Reporting Authority. 6. Fraud reporting. If the officers or employees of the company involved in fraudulence are committed against the company, the auditor shall immediately report the matter to the central government within such time and in such manner as may be prescribed. 7. Winding up. As per Section 305, at the time of voluntary winding up of a company, it is a mandatory requirement that auditors should attach the copy of the audits of the company prepared by him. Managing Director. The directors of the company appoint a person amongst themselves for the purpose of carrying out the day-to-day affairs and policy decision taken at the board meeting. This person is called a managing director or whole-time director as he entrusted with substantial powers of management of the company. Meaning, MD is the person at the head of the executive structure of an undertaking by virtue of his membership of board of directors, or by virtue of powers delegated to him by the body. Definition. The Companies Act defines a managing director as a director who by virtue of an agreement with the company or of a resolution passed by the company in the general meeting or by the board of directors, or by virtue of memorandum or articles of association, is entrusted with substantial powers of management and includes director occupying the position of managing director by whatever name called. Power of managing director. The powers of MD derive from one of the source stated in the Companies Act. The powers of managing director are as follows. 1. To supervise and control the work of the employees of the Federation. 2. To conduct, negotiate and make arrangement for the purchase and sale of goods and their proper storage as may be entrusted by the board. 3. To sanction expenditure on establishment or for purchase stores subject to the approval of the board. 4. To sign on behalf of the Federation and to conduct its correspondence. 5. To supervise and control staff of the Federation subordinate and to maintain their confidential files. 6. To move the government and other competent authorities for disciplinary action against officials lent by the government. Corporate Administration. Duties of Managing Director. 1. Bring in new business. A managing director is responsible for new business development. He helps to bring new clients to the firm. The director sets meeting with potential clients and presents a proposal in order to win a client's business. In addition to bring in new work, the managing director must also research and implement new strategies that could help increase the company's profits. 2. Keep clients happy. Once a new client comes on board, the managing director must also nurture this new business relationship. The managing director helps to make the transition smoother and addresses the client's major concerns on an ongoing basis. 3. Recruit and retain employees. The managing director oversees the recruitment and retention of employees. He is responsible for finding the best talent and bringing new team members, particularly top-tier executive-level workers. 4. Report to Board of Directors. One of the most important roles of a managing director is to meet with and report information about the company's overall performance to the Board of Directors of the company regularly. Responsibilities of managing directors. 1. Implement the board's policies and strategies. 2. Develop and present the strategic and annual business plans to the board for approval. 3. Report board on progress against the strategic and annual business plans on a regular basis. 4. Manage the day-to-day operations of the company. 5. Manage, motivate, develop and lead members of the management team. 6. Manage resources efficiently and effectively to achieve the company's objectives. 7. Chair management team meetings. 8. Take a leadership role in establishing or developing the company's culture and values. 9. Ensure that appropriate internal audit processes and procedures are in place. 10. Develop and implement a risk management plan. Distinction between director and managing director. Director. 1. The directors take responsibilities for framing the policy of the company. 2. The directors do not take part in the day-to-day affairs of management of the company. 3. The directors are appointed by the shareholders of the company at the general meeting. Managing Director. 1. The managing director takes responsibility for implementing it. Daily management of the company. 3. The managing directors are appointed by the 2. The managing director actually takes part in directors at the board meeting. 4. The maximum number of companies for which a 4. The maximum number in the case of a corporate administration. Managing director is only 2. Person can act as director at a time as 15. 5. For all companies, public and private, the appointment of directors is compulsory. Compulsory. 5. The appointment of a managing director is not. 6. The directors are appointed for a period not 6. The managing directors are appointed for exceeding 3 years at a time. Period not exceeding 5 years at a time. 7. The directors are subject to retirement by rotation. 7. The managing director is exempted from this provision. 8. Directors are considered as agents of the shareholders of the company. 8. The managing director is considered as an agent of the board of directors. 9. The directors do not hold any office of profit, but 9. The managing director holds a regular office, so only receive honorarium for attending meeting. Profit and receives a regular salary. 10. Directors do not enter into any agreement with. 10. The managing director enters into in the company regarding their powers, duties, etc. agreement with the company which provides for the terms and conditions of service, his powers, duties, etc. Audit Committee and CSR Committee. Audit Committee. Audit Committee is an operating committee of the Board of Directors charged with oversight of financial reporting and disclosure. Definition. According to Institute of Internal Auditors, the Audit Committee refers to the governance body that is charged with oversight of the organization's audit and control system. The concept of audit committee under the company's ACT, 2013. The audit committee is established with the aim of enhancing confidence in the integrity of an organization's processes and procedures relating to internal control and corporate reporting, including financial reporting. The Companies Act 2013 intends to significantly raise the bar on corporate governance in India and align with global standards. It encourages disclosures and transparency. Under the new company law, constitution of audit committee is mandatory for listed companies and following classes of companies. I. All public companies with a paid-up capital of 10 crore rupees or more. E. All public companies having turnover of 100 crore rupees or more. E. All public companies having in aggregate outstanding loans or borrowings or debentures or deposits exceeding 50 crore rupees or more. CSR Committee. The Ministry of Corporate Affairs has notified Section 135 and Schedule 7 of the Companies Act 2013 as well as the provisions of the Company's Corporate Social Responsibilities Policy, Rules, 2014 to come into effect from April 1, 2014. Corporate Administration. With effect from April 1, 2014, every company, private limited or public limited, which either has a net worth of 2,500 crore or a turnover of 21,000 crore or net profit of 25 crore, needs to spend at least 2% of its net profit for the immediately preceding 3 financial years on corporate social responsibility activities. Company Secretary. The word secretary is derived from Latin word secretarius, meaning confidential officer. Section 245 of the Companies Act, 1956, a company secretary is a person who is a member of the Institute of the Company Secretaries of India or any other individual possessing the prescribed qualifications, appointed to perform the duties imposed on him by the Companies Act, the ministerial or administrative duties and managerial functions that are delegated to him by the board. Types of secretaries. There are various types of secretaries such as 1. Private secretary. A private secretary is usually appointed by an important person such as a minister in the government, member of parliament, manager, business magnate of professional men like doctors, lawyers, etc. His work is to attend the correspondence and other personal work or office work of the employer. 2. Secretary of a club or association. Non-profit-making associations like charitable institutions, cultural associations and professional association, sports and athletic clubs may appoint a full-time secretary to conduct the day-to-day activities of the association or club. The important functions of the secretary of an association are: I. Attend to administrative function, maintenance of accounts and records, supervision of staff and arranging for the audit of the accounts. 2. To conduct activities of the club or association. 3. To convene meeting of members or executive committee and to prepare the required documents and minutes of meetings. 4. To advise the managing committee on various matters relating to the association. 3. Secretary of a cooperative society. Generally, full-time secretaries are appointed in cooperative society. In some cases, one of the members of the managing committee may be elected to act as secretary. The functions of the secretary of a cooperating society are: 1. To assist the managing committee in managing the affairs of the society. 2. To execute the decisions taken by the managing committee. 3. To maintain proper records and registers. 4. To arrange meetings and to attend conferences on behalf of the society. Professor Shashikumar D.S. Corporate Administration. 4. Secretary of a government department. Each department of the government is under the control of a secretary, i.e. finance department and secretary, education department, etc. He is also executive head and advisor to the minister who is concerned with that particular department. The duties of a government secretary are: 1. Administrative and executive functions. 2. Advisory functions. 5. Secretary of a local body. Municipal corporation and panchayats appoint a paid secretary who will function as an office executive. He is a link between the authorities and the staff. His function is to supervise and coordinate all activities of the office, prepare budgets, statements, arranging meetings, draft minutes, etc. 6. Secretary of Trade Union. Every trade union appoints a secretary. He is a powerful person wielding much influence over the organized laborers. He is required to hold meeting of the union, to record their proceedings, to maintain accounts and statutory books, and to conduct the correspondence on behalf of the union. Appointment of secretary. The appointment of company secretary is a statutory obligation for every public limited company. Such appointment should be through written agreement. The agreement should include the period for which he is appointed, condition of employment, salary or allowance allowed, rules regarding termination, etc. The possible ways of appointing company secretary are as follows. 1. Appointment by the promoters. The first secretary of company is generally appointed before its incorporation. The promoters give such appointment for assisting them in all preliminary works of company formation, holding meetings, keeping minutes of meeting, and preparing various documents. 2. Appointment by the first board of directors. After incorporation, the first board of directors appoints the company secretary by adopting resolution in their first board meeting, as his appointment is mandatory for every public limited company. 3. Appointment from within the board of directors. After incorporation, the promoters can appoint any one of them as company secretary. Who is deemed to be qualified for the post? 4. Appointment of professional secretary. At the time formation or after incorporation of the company, the directors can appoint any professional company secretary and can be appointed on a part-time or full-time contract. Corporate administration. Qualities of the company secretary. In addition to the statutory qualification, a company secretary should possess certain other qualities, such as 1. Sound general education. 2. Command over language. 3. Knowledge of office administration. 4. Knowledge of accounting and taxation. 5. Knowledge of company law. 6. Knowledge of various acts relating to staff. 7. Knowledge of mercantile law. 8. Knowledge of the industry. 9. General knowledge. 10. Impressive personality. Duties of company secretary. INA Degree College. The duties of the company secretary may be classified under the following broad heads. 1. Statutory duties. 2. General duties. I. Duties in relation to director. E. Duties in relation to shareholders. E. Duties towards organization and office. IV. Duties in relation to the public. Statutory duties. The statutory duties of a company secretary are those prescribed by the Companies Act or by any other legislation such as the Income Tax Act, Sales Tax Act, Stamp Act, etc. The most important statutory duties are a. Maintenance of books and registers of the company. b. Filing the necessary returns with the Registrar of Companies. c. Supervising the issues, allotment, transfer and forfeiture of share and debentures. d. Attending to meeting and recording their proceedings. e. Safe custody and proper use of the common seal of the company. General duties. Duties in relation to directors. I. The secretary has to look after the correspondence with the director, convene board meetings under the direction of the managing director, prepare minutes and execute the orders and instruction of the board.